Today is Monday, February the 12th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials this morning, Alan, particularly the stocks. Why do stock futures continue to advance when analysts believe the Fed Reserve will delay a Fed funds rate cut?
Okay, well, first of all, stock index futures have been very strong this year, including record highs. Of course, despite the ongoing belief that the Fed will be slow to lower rates. So it appears that some other fundamentals or fundamental is dominating that is not yet obvious. So when stock index futures can advance at a time when the interest rate outlook is negative and would imply a weaker stock index futures market, the fact that it's higher suggests that there will be some follow-through gains. Now, what that fundamental is, maybe it's better earnings or hard to say what that might be now, but the fact that we are higher when we should be lower is a sign that we will probably see additional gains, at least in the short term, for stock index futures.
Alan, you mentioned the interest rate market. What is your outlook there?
So I'm not really seeing anything encouraging for the bulls in the interest rate futures markets, especially now that the Fed is on track to be slow to pivot to accommodation this year. Also, economic reports have held up relatively well, while the technical aspects appear to be bearish on balance. So from here, I think the interest rate futures markets across the board will probably tend to drift lower.
Yeah, before we get to Mark here, how about a quick review on what type of reports we're looking at this week in the financials?
Okay, well, tomorrow we'll have the January National Federation of Independent Business Small Business Optimism Index at 92.4, but that will be overshadowed by the January Consumer Price Index, which is expected to be up 0.2%. No major reports on Wednesday. Thursday, we'll have jobless claims at 219,000. Retail sales gets it down 0.1%. Industrial production for January up 0.2%. And the housing market index for January predicted to be 46. And then on Friday, we'll have housing starts guessed at 1.47 million, permits at 1.51 million. But then the very important January producer price index on Friday guessed at up 0.1%. So it's going to be inflation numbers that will dominate the markets. Of course, Tuesday, the CPI, and then on Friday, the PPI.
Thank you. Mark, looking at the grain markets, with China closed for the Lunar New Year and South America celebrating Carnival this week, what will drive agricultural prices?
Yeah, I think with much of the world off this week, I suspect trade volume will be on the lighter side. Last week's USDA WASDE reports didn't really provide any supportive news. Stocks higher pretty much across the board. We'll get our weekly routine demand numbers this week, including a monthly NOPA crush report out on Thursday. So I'll be interested to see if we've fallen enough to generate any export demand news outside of Asia. Weather-wise, conditions in South America appear to be improving. Much of central and northern growing regions of Brazil had pretty good rainfall last week. These rains are expected to slip into the southern portion of the country this week, an area that's been a little bit hot and dry recently. So look for some relief there. And also good rains have swept across Argentina here in the past week, also bringing relief to areas that were under a lot of stress here with hot, dry conditions last 3 weeks. So look for improved ratings here. And markets also be bracing for the USDA Outlook Conference here on Thursday and Friday of this week.
Yeah, and that Outlook Conference later in the week, what do you think we'll see from this?
Well, market is bracing for some bearish news. If you recall, back in November, when the USDA first issued their early baseline projections, they showed corn acres in 2024 slipping about 3.5 million from last year to 91 million acres. And despite the lower acres with the trendline yield plugged in at 181, which seems a bit optimistic, production was coming in at just over 15 billion bushels, which was about 400 million over demand. So expecting ending stocks to jump to 2.6 billion. And if you realize that would be the highest in decades. So my guess is acres actually will not come in this low, come in closer to about 92 million, which would only add to the supply glut as long as Mother Nature is cooperative this upcoming growing season. In soybeans, acres expect to come in pretty close to 86 million. That'd be up about 2.5 million from a year ago. However, unlike corn and soybeans, we do have building demand base with increased renewable diesel production. And wheat, I look for acres to come in there about 47 million. That's down 2.5 million from last year. However, about 1 million below what they estimated back in November.
And lastly, Mark, how about a quick update on how the speculative traders are positioned in the grains currently?
Yeah, we just continue to see speculative traders pile into the short side of the market. In corn, money managers now, they've been net sellers for 6 consecutive weeks, extending their short position to nearly 300,000 contracts, the largest since May of 2019. Similar story in the beans. They've been net sellers there for 12 consecutive weeks. And likewise, have flipped their long position of about 88,000 contracts back in November to now short 130,000 contracts now. And also the largest short position since the spring of 2019. Speculative traders remain short the wheat and the soybean products as well. One area we've seen some good buying here as of late has been from the index funds. They've been buyers now in the agricultural space 5 out of the last 6 weeks. So after months of seeing liquidation or them being net sellers as interest rates increased, I think we're finally seeing a bottom here in their holdings here as of the end of late last year.
I will continue to watch that. Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.